Let's do a Monday update. What's happening with the Bitcoin price, where we think it's going to go, the key levels we're watching, and the trades I'm looking to take. It's been a fantastic 2023. And I keep saying that because it's nice to say. Price is now up 100% from the lows. It's double. And there's plenty more opportunity to come with that. There's no real chance I see that we just go sideways and don't get more volatility. So if you're a trader, there's opportunity to make money in the market. And this isn't a full-blown bull market either. I'll show you guys when the bull market comes, what levels I'll be watching to trigger that. And after we get above those specific levels, it's going to be a completely different market, and the opportunities will be far, far more than 100% pump over here. So I'll show you all of that. And if you want to trade like I do, Phemex is where I do most of my trading. Easy to use platform and a pretty huge $6,000 sign up bonus if you use my link in the description below. Right, so key levels we're watching right now. Bottom of this range over here at about 32K is probably the most significant resistance we're looking at right now. Nothing is going to be more important than this. It represents a key structural shift, as during the uptrend, this was one of the biggest lows before we got this rally here, which was the last rally before we entered the full bear market. So this is a big claim. If we get above these two levels, which is somewhat synced with this 36K level, which will come right after it. So there'll be some good opportunities to play between these two levels. That's what I'm looking at the upside, 32K and 36.5K, around there. And then on the downside, we've obviously got the key 25K level, or let's say 24.5 on high time frames. It doesn't quite matter. This was the key structural shift where I said, as we were consolidating sideways, guys, this market's probably going up. It's not rocket science. We've made a key structural claim over here. The trend is heading in a clear direction. Don't bet against the trend in crypto. When it's going in one direction, the most probable thing is that it continues there. Exceptions to that rule, of course, but similar with the downtrend here. As soon as you saw the market structure start to shift heavily bearish, you just keep betting that it goes down and down until you're proven wrong, where the structure shifts, and that's what's happened here. Of course, not everyone trades like this. You can build systems to do the opposite if you want to, but this is just how I trade, and you can take these ideas and try build your own systems. And finally, we'll just get the moving averages on, so you guys can see another reason why this 32K level is so significant for me is really does line up with this 100-week moving average, which is an extremely significant one in crypto. It has historically been a huge turning point for the markets, and yeah, we're getting back up to it. Now, I don't expect us to break straight above it. In fact, if I were to predict, and I don't like doing predictions, I see the price going up a little bit more, either to the 36 or 46K level, and then I see us going down a bit. I don't think 2023 is the year we go into the full-blown bull market, and I say that because I've compared this to 2019 a few times, where the price did go up. It got above this 100-week moving average, went all the way up to 14K, and then what happened is it went sideways, bounced off the 100, had one deviation below, and then went up. And that's max pain, like the market. I think that's the way most the bad traders get wrecked. We go up to either 36 or 47, and then we dip down, bounce around this level for a bit, come down, maybe touch this area one more time, and then sharp bounce up, taking no prisoners. But anyway, that's not very important. Those are just my thoughts, which I know people are interested in. How I trade has nothing to do with that. I trade level to level. If we go to them one day, what I do is I look for momentum, I catch that momentum, and then I keep going. I'm going to show you guys how I've traded this whole thing and how I'm going to continue trading it, because I've made more money in 2023 right now than I did in most of 2022. Why? Because these are ideal market conditions for me, and I'll show you exactly how. So I am a breakout trader. I like to trade momentum, breakdowns as well, and I've got a couple other systems, but the place I put most of my risk and I take my biggest trades are breakout trades like this. When we see price get above levels like this, what I do is wait for mini ranges to form, like they do here, and then I'll catch the breakdown or the breakup. So I'll form the range, catch the breakup or the breakdown. Sometimes I get bored and trade in between the range, which much smaller size. I have decent systems for that, but it's not the bulk of my money. Then we continue. Again, it goes sideways. I'm looking for the breakup or the breakdown. Every time it traps, I expand the range a bit. See what I can get. Sometimes I'll catch the breakout on lower time frames, and you can see the levels hold significance, and you can continue playing them as it goes sideways, bounces between them, lots of breakdowns, lots of breakups to catch, and then these are my biggest plays right here. When we get above this level, now we've got a range here, same thing, we break up above it. I just build the ranges, catch the momentum, build the ranges, catch the momentum. It's different to people who take much higher time frame ranges. What I do is I don't really take middle ranges. I don't create static ranges and then just trade those levels. I'm a bit more dynamic. I look for big structural shifts, and then I catch periods of consolidation like this and look to catch breakouts between them, and also trade level to level. I like trading level to level in these conditions here, where it's half ranging, half breaking down, breaking up. These are really nice to trade. And then these are my favorite. These periods here, I just snipe and catch them, and I'm very good at avoiding traps in these areas. So let me clean the chart up a bit. So what I'm really good at, that if you want to trade like me, you need to learn to get good at, is if we go to the 4-hour time frame, you need to get really good at avoiding traps. So if we go here onto the 4-hour, where the range started, you'll see if we take a replay over here, let's bring my favorite moving average in as well. It's actually the 7 moving average. It really helps me visualize the price data. And we create a range here. So resistance there, came down, acted as support, and then hit resistance there. We've got just under 27 and 28.3. Now, where most people mess up with trading this is they will try to catch a breakout there, and then they'll try to catch a breakout there, and they'll try to catch the breakdown there, and they'll try to catch a breakout there, breakdown there, and same thing, try to catch it there, try to catch it there. And by the time it comes to the actual breakout where the price goes up, they've lost so much money that it doesn't even matter. Now, the way I trade these is I don't firstly catch every single breakout. I took 1 L on this, and that was one of these two. I can't remember if it was 23rd or 22nd. One of these breakouts I got caught in because there was confirmation, but it didn't follow through via my system. So if it was this one or this one, I can't remember. But what happens is after it fails, what I do is I adjust my level up. So next time I need a bit more confirmation. And as you can see, just by moving the level up here, you get to avoid so many of these traps. Whereas if you kept the high of your range exactly at this level here, which you originally had it at, despite these failures, you would have got trapped way more. So what this does is completely change my win rate. I'm sacrificing a bit of profit because maybe I won't get in as early. So instead of getting in at the 23k level or 24k level, I'll get in at this level. Like I miss out on that, and it makes me miss free losses over here. I sacrifice this much profit to miss free losses over here and then catch the rest of the move up. If you want to trade like me, you need to create your own consistent systems to do stuff like this, and you can't get trapped because this is all about patience. You're not taking loads of trades. I know people who will be looking to short, long, short, long, short, long. And I do catch some trades in the ranges here, but those will be with drastically reduced position size. My biggest trades with the biggest position size, with the highest win rates, are just these breakouts and breakdowns. If I didn't love trading, I would actually do 0 of the range trading and just trade these breakouts here where I make the most money. So let's go to present day right now and see exactly what's happening. And as you can see, we're seeing that exact same thing happening here. Some form of range is happening, and it's a little tricky to form the top of it because we've got a few data points showing this 30.5k as the top, but we've got this small deviation here, which could actually be where resistance is right now, but it's a little difficult to know in the early stages like this. So what I do is just pay attention to both levels. I look for extra confirmation when we get above the 30.5k level, and I'm also watching the story the candlesticks are telling me. So right now, the bears seem to be in control. I'm looking at what's happening, and the biggest candles, the sharpest candles, tend to be from the bears. Remember, there's the technique to visualize candlestick charts and what they're telling you. You don't need to know patterns like bearish engulfing or shooting stars. That stuff doesn't matter. Just know that there's a battle happening here. there's the bull army, which is these candles, and the bear army, which is these candles. Now, if the bear army has to use 1, 2, 3, 4 candles over here, and all 4 of those armies are wiped out by one bearish candle like this, that shows a lot of strength for the bears. And then we see the exact same thing happen here. Lots of sideways consolidation where we're not able to recapture the ground that the bears captured, and then we finally take another hit from the bears. The bears are winning the war right now, so that adds a bearish element to my bias. And that means I'm more likely to be extremely cautious on a breakout here, unless the candle data here gives me a different story, and more likely to look for something closer to the 30.8k level, and I'll be paying attention to how price reacts to both this level and this level. So if you guys have been following closely, there was a point at 24k here where I turned bearish, and it was pretty perfect because price had a giant move up into a key structural level. I wasn't an oracle. I didn't know that this area was going to be bearish for sure. I just knew that the risk reward was down loads. Even if I caught the breakout above this level, it goes straight into resistance a little bit later, and it's going to struggle with that. So why wouldn't I just wait and catch it after this? And that's what I did. I caught it after 25, got this move, waited for the consolidation, and then caught this move as well. So similarly, if we want to catch the next top, because we have had another big move. I mean, this move from the bottom here is up 60%, and this is a huge asset. This is Bitcoin. This isn't some random top 100 coin. So this is where the weekly analysis is really useful. When we set our key resistance over here at 32k, it gives us an idea of upside targets for the trades that we'll be taking. So if we zoom in and let's go back to the 4 hour, which I like analyzing these little ranges and consolidations on, you can see that we've got some decent potential setups and a lot of upside to capture up to 32k, where the next major resistance is. So from 32k, even if we were to use the bottom of this range as our invalidation, we've got a 1.86R trade. Now couple that with whatever percentage accuracy rating you have yourself for capturing breakouts above this level, and you've got a pretty decent trade. And the thing is, I seldom will use the polar bottom of this range. Far more often I'll use the midpoint of this consolidation range versus the bottom. The only time I'll use the bottom is if there's a huge amount of upside and I just want to be nicely positioned, even if it's a trap, and I can add more to it later. So we're in a really nice spot right now. One more thing I'll make sure that people consider is if we do enter the breakout trade over here early, we want to pay attention to how it reacts to this 30.8k level, because if it is hard rejecting off of this level and really struggling to get above it and then coming back down to this level, I probably won't hold the loss up until the midpoint. I might exit a little bit earlier, and then I can always get back in above the 30.8k level. It's a little tricky. The hardest bits to trade for these breakouts are right when the range is first forming. So over here, where you have to adapt the levels a bit and make sure you don't get trapped constantly as it fails to break out. So that start bit is really difficult. And the other bit that's really difficult that I spoke about on a previous video is just waiting. Like I said, I just enjoy trading. So I build other systems that make money in the ranges, but they don't make me most of my money. Most of my money comes from just these trades here. So all I should have done in this entire period to have made the most money with the least amount of time would have been 2 trades. The one loss I took trying to catch the breakout over here, and this confirmed breakout. Those are the only 2 trades I should have taken in this entire range if I wanted best ROI on my time. But I like trading, so I do it a bit more than that. But I just say this because people don't talk enough about how important it is to do nothing with your trading when you don't have an edge. Like, you can be testing, you can be back testing, you can be studying, you can be working on a different business, whatever, but only take trades when your system tells you it is heavily in your favor. So that's the main breakout trade I'm looking for. There's also a beautiful breakdown trade as well, which is from here to get the retest of the 28.6k. Absolutely love that breakdown trade, because like breaking down after hitting 30k resistance is not at all unlikely. So I will be paying close attention here. And like I said, the bears are winning the war here, so the market is in favor of the bears. It would be a really clean structure to have a little high there, lower high there, low there, and then break down past this level down to there. So I'll be paying attention to that as well. I probably won't be trading this range as much. I'm just waiting for either the breakdown or the breakup, and that's it. Hope this update helps you trade the crypto markets. And if you want a good platform to trade Bitcoin and Ethereum, Phemex is the place to go. Remember, link in the description below, up to $6,000 sign up bonus.